Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Dolev, Senior Financial Technology Analyst at Mizuho Americas, to discuss trends in global payments. Dan, it is great to have you back with us. Welcome to TradeTalks.
Hey Jill, always great to be on your show.
How have countries and merchants around the world been adopting modern payments?
So modern payments, I mean, the most important trend in modern payments right now, and I just hosted an expert call on this, is real-time payments, FedNow, and countries globally have started adopting it. So in Brazil, for example, you have Pix, which is basically an account-to-account payment scheme. In India, you have something called UPI. Obviously, in China, you have Alipay. This is the trend, and this is actually the future, and all of this is actually coming to the US right now. So real-time payments, account-to-account, kind of bypassing the rails, the network rails, is actually coming to the US, and that's a huge trend.
How are digital wallets impacting e-commerce?
I actually think this is the most important thing that people are missing. I think that over the next 3 to 5 years, about half of e-commerce is going to be digital wallets. So you're not going to just go in and pay with your regular credit card or debit card. What you're going to end up doing is you have like a checkout button, like Affirm or PayPal or ShopPay or whatever, and those are going to be your digital wallets, and you're going to basically go and check out using those more than you're going to do that with like a regular credit card. That's the future.
With blockchain, real-time payments, and open banking, how do you see that innovation creating further opportunities?
So, I'm very bearish on crypto, but I'm very bullish on blockchain. Mm-hmm. And I think that, what blockchain would do eventually is it takes away the middleman. So the most interesting thing there is there's a lot of companies out there that are processing bank transactions, that are basically verifying transactions. Like Visa and MasterCard, all they do is they sit in the middle and they verify that you're you and I am me. But with blockchain, you don't need that. So eventually you're taking that middleman out of the ecosystem and you can save money and cut costs. So I think it's a huge, innovation in payments or everywhere, but in payments, it has very, very interesting and useful use cases.
Is it safe for the consumer, though, to not have that middle intermediary?
It's actually safer because if you think on the blockchain, everything gets verified and it's almost fail safe. Like with Visa, what prevents you from just taking my card and going on a shopping spree? Really nothing, and eventually you'll get caught, but you could actually make some transactions. You can go to a restaurant, but with blockchain, there is much more stringent verification because everyone in the blockchain has to verify that you are you. So identity theft is a huge advantage when it comes to the blockchain versus, say, the regular networks.
I would imagine it would save money for merchants as well if they didn't have the intermediary. I mean, I know there's places I've been to, whether it's a restaurant or nails or hair, they tack on another 2-3% if you use a credit card.
Oh, of course. Those surcharges are the biggest topic right now. So what happens is a lot of the merchant acquirers are actually, sometimes double dipping into people's wallets. So essentially the interchange, which is what the merchants are taking, was about 3%, and that's some of it is going to the issuer, which are the banks, some of it is going to the merchant acquirers, right, et cetera. But what's happening right now is that the cost of acceptance is actually moving up. And you have a lot of merchants doing surcharges. I'm sure you've been to a restaurant where people are charging you an extra 3%. So a portion of that actually goes again back into the ecosystem. So you're literally double dipping into the same source, and now it's a tax that's levied on the consumers. And I think that's what makes it really, really painful for a lot of people.
How is Apple Pay Later? Is that impacting BNPL at all?
So actually, surprisingly, and this is the biggest news, I met with Max Levchin, the CEO of a firm, last Thursday for dinner, and I asked him the same question, right? The firm is, in my view, the highest quality buy now, pay later, and he said that a few months into Apple Pay, there has been no impact from Apple Pay Later. So there's been a huge kind of brouhaha, and everybody was worried about it. The stocks were trading down when Apple announced it, but a few months into it, there's no impact, which shows you that it's kind of much ado about nothing when it comes to the real impact on buy now, pay later.
What are some of the ways that payment companies work with merchants to manage inventory and discounts?
So that's actually the future. So again, back to my conversations with Max Levchin, the founder of a firm. The future is that you're not just doing buy now, pay later, you're actually helping companies, manage their inventory. So if you over order or under order, say if you're a Walmart and you're over ordering TVs from Samsung, instead of discounting them, you can actually do a buy now, pay later promotion, and that helps you keep your price integrity and avoids discounts, which are diluting the brands. And the buy now, pay later company that has all the data and sees a 360 view, they can actually help you fine tune that. And that's the value that they add. So there's so much more value they add with the data versus just, a pay in for. And that's why people misunderstand, I think, the value proposition of a firm, for example.
How could payment companies be impacted if we see a decline in consumer credit quality?
So the payments companies are actually, depends on which ones, right? So the declining credit quality is something that's a big worry for like the lenders, for example. So if you're like in a firm or an upstart, those are actually taking risk, right? In terms of, if they do their own balance sheet lending, and the decline in consumer credit quality is going to impact them if there is a recession. But on a more removed level, like Visa and MasterCard, they're a little bit more immune to that because at the end of the day, they're just collecting their, few basis points on every transaction. So it really depends where you are in the payment ecosystem. I'm more concerned about lenders when it comes to a bad economy than, say, a merchant acquirer like Fiserv, who's going to be fine either way.
Right. If you think about the future, do you think a number of these companies could replace, let's say, a Visa or a MasterCard as an example, or as we start to incorporate blockchain into our everyday lives? Could it change the landscape?
Yeah, I think about the future a lot.
Yeah.
I get paid to think about the future. I'm not always right, but I think about it a lot. I actually think Square, which is now called Block, if there's one company out there that can actually recreate a closed loop ecosystem, which has merchants on the one side with their POS, consumers on the other side with the Cash App, and buy now pay later. They bought Afterpay last year, which was like a very big deal. They have kind of the trifecta of basically consumers, merchants, products. They could actually recreate a closed loop payment ecosystem and displace the current network. They need more scale, they need more users, they need more merchants, they need to go global. And they're very, very focused on blockchain. Maybe over-focused on Bitcoin, but also focused on the future and blockchain. I think they've got the one chance to basically disrupt JP Morgan in the future.
All right, Dan, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.